market update for the third week of February 2026. There was a reasonable amount of noteworthy things going on last week, but it was all eclipsed during the weekend by the Supreme Court ruling not authorizing or unauthorizing President Trump's tariffs, to which there was a swift reaction and imposing a universal tariff on all countries, which actually means perversely that a lot of countries that have been, in their perception, harshly dealt with in this new tariff regime are actually a bit better off at that global 15% level. And a lot of people that seem to get preferential treatment, like UK and Australia, for instance, and Japan, are actually worse off with tariffs going up. Obviously, there's a lot to play out, and the market's trying to digest what this really means. But overall, it hasn't been all that negative. We'll see what happens when the US markets open overnight. That said, Australian market down today. But interestingly, the Aussie dollar was actually up. So in a risk-off scenario, you actually tend to see the opposite. So an all-new world in many respects. Talking of which, next week, we'll be talking about the Portfolio Construction Forum, and if you're not going already, we'll report back on that, which will be this week, to which the theme is It's a Whole New World. This one's probably got a little bit to play out. For now, it didn't look like great news for US assets, even though NASDAQ and the S&P 500 ended up last week. Futures are indicating that they might be down when they open tomorrow. So back to last week, what actually happened. We had a couple of big US data releases at the end of the week, which didn't really bother markets too much, but the PCE inflation, which is the Fed's preferred measure, was up a little bit. Just a reminder that maybe there's a little bit of inflation lurking around. Some of it looked, dare we say that word again, transitory. But also GDP came in much lower than was expected, and that's been put down to the government shutdown and how difficult it is to measure those impacts. So the market wasn't particularly startled by that, but it did show some potentially worrying signs. And at the end of the US reporting season, though, the news for companies generally looks pretty good. But we are reminded that it is a bit of a two-tier economy. For instance, CapEx up by 24% year on year, but if you strip out the tech majors, it's actually only about 4 or 5%. So it does sort of marry with that picture of overall a slightly slowing economy. Meanwhile, the rest of the world actually reasonably positive with the so-called PMI indicators coming in, and these purchasing managers indices, which show sort of intention of investment, actually quite strong in the Eurozone. And as we discuss later with Andrew Hunt, actually corroborating other signs of quite strong activity in Europe, also UK, Japan, but also fair to say the US, signs of a sort of relatively strong economic background. And in Australia, unemployment coming in at 4.1%, also pretty solid. Now, the biggest impact so far that we've seen over the weekend, where we do get an insight into bond yields, certainly in the Asian trading session, is that they have ticked up quite a lot in the US. And there is a worry that that lack of tariff revenue, which is why Trump obviously was putting it up to 15% to make up for that, that could affect the fiscal deficit and increase funding pressures for the US. Also, in the Middle East, we have seen that build up of geopolitical tension, and oil was stronger last week, as was gold, in amongst potentially all of this uncertainty. Another interesting thing to pick out was an announcement by not a very large private equity fund, but managed by quite a large manager, Blue Owl, that locked up for redemptions. Although, as the manager has indicated, they have been able to sell a lot of their bonds at par. Who knows whether that's because they're the best quality ones or otherwise. So, there's maybe signs of a little bit of stress in credit, because we've also seen credit spreads start to ease up, which is something that we haven't seen for a long while in high yield, but also in investment grade bonds in the US. And that's one of the things we talk about with Andrew in this week's What We're Working On. Slightly longer video at almost 40 minutes, but some quite interesting themes around this repatriation trade, especially concerning China, and Andrew's been talking more and more about the influence of China in global capital flows. And actually, that's another thing that's been supporting Europe, and some question marks around the US. We also talk about the AI boom and the fact that, and this is what the market's worrying about, is that this is what he calls an input boom. It's not an economic boom yet. And there's going to be that uneasy period in the middle before we see actually how that turns out into positive productivity. So quite a lot to talk about there. And next week, we'll probably talk about what's been going on in markets, especially with those sort of growthy quality stocks, as we were talking to quite a few managers about that last week and this week. And we'll also be talking about what happened at the Portfolio Construction Forum, where we'll hopefully get some insights into these kind of issues as well. Look forward to talking again next week. Thank you.